What is up YouTube? Daniel here, and we are back again here on my channel, Life with Dan, where we go into different business topics like stock market investing, entrepreneurship, financial and life decisions. Thanks again to all of you that continue to support the channel, that have continued to like and to comment down below and to, let me know how you're feeling about it on Instagram and everything. I appreciate all the support, and it definitely helps keep me going. To those of you that are here for the first time, welcome, and I hope you enjoyed today's video. Now, I've got another stock market video for you guys, of course, but today's is going to be a little bit shorter than usual because I just wanted to share with you guys a recent move that I just made. I actually just made it last night and today. Essentially, I jumped the gun, guys. I jumped the gun on a stock, and I am actually making a bet for the short term. I know traditionally I don't do this. I don't really go for short-term plays or flipping stocks or anything like that. I typically look for long-term plays and stocks that are going to give me a lot of value over the next couple of years. But, I'll go into why I decided to switch things up right now and what stock I got into, and we'll also go into a little bit more about what I've kind of been doing with my portfolio in general. But yeah, it should be a pretty fun and exciting video, guys. We'll get into all that right after the intro. So to kind of catch you guys up on where I've been personally with regards to stock market investing and my own portfolio, to kind of put it straightforward, guys, to put it to you simply, I've been kind of bored lately. If you've seen my videos before where I talk about the stocks that I have in my portfolio and the stocks that I've currently been looking at, stocks like Boeing, Simon, Sonos, Workhorse, these are all stocks that I plan on holding for a while. And although recently some stocks like Sonos and Workhorse have been pretty exciting, time goes by and you start watching the stock market more and more, and you see things going on, and you're like, maybe I should kind of try out the short-term game. Let's see what happens. So what I've decided to do essentially is set aside a little bit of money for my portfolio that I will actually dedicate to trying to go about the short-term game, the flip game, buying into a stock that I think is going to make some sort of significant move in the short term, and selling out of it once that does happen. So I said to myself, let me take about like $2,000 or so, maybe a little less to not be so aggressive depending on the situation, but let me take about $2,000 and try to flip that at a faster pace in the short term. Let me find a stock that potentially could move up 25% plus, in the next month or something that maybe could make me a good little return on my money, or if even up 30% on 2K, that's like $600 something, right? So not too bad if you could achieve that in a short period of time. And alongside my shopping for a possible short-term stock, at the same time, I feel like the algorithm gods are like listening and feeding me different content that's like inspiring me to shop around and find that next thing. I actually recently saw this video. I think it was like a Bloomberg video. I'll put the link down below, but it was a super inspirational video about this guy that ended up turning $20,000 into $2 million over the course of like 3 years throughout different investments. So, it's just about finding those things that are going to pop. So if you're looking at me from a third person point of view, I'm getting riled up. I'm over here looking at my stocks like, okay, I need to find something. Maybe I can find short-term plays and, get some good money off that, bounce from one stock to another, and still keep my major investments. Why not? And then yesterday happens, Wednesday, October 14th, where one stock out in the market made a major move to the downside. We're talking more than 25+%, losing more than a quarter of its value in after hours after the company adjusted what their third quarter revenue numbers might be. They also withdrew their guidance that they had issued in the previous quarter for full year 2020, which concerned a lot of people, and obviously to the point that made a lot of investors sell out of their shares. I know some of you are already familiar with what company I'm talking about, but for those of you that don't, we are talking about Fastly, ticker symbol FSLY. So we're going to briefly go into what Fastly does as a company. I'm going to try to explain what it is that they do, and I'll also provide a link below to a video that I found that I thought did a pretty great job at explaining what they do as a company. But the main focus of the video, more so than what Fastly does, is my reasoning behind the investment and why I think there's an argument to be made for a short-term bet on Fastly stock. So after skimming through their investor relations website, their annual reports, recent articles and whatnot, I've been able to piece together that Fastly is, amongst other things, a content delivery network provider. The company was founded in 2011, and its current CEO is Joshua Bixby. Not that big a company with just over 630 or so employees, and of course, the company is stationed in San Francisco, California. They fall into this new category of business known as infrastructure as a service. Their main customers being developers and providers of content at scale, Fastly is mostly in the business of making people's websites and platforms move faster. When you are a content provider, say you are the company TikTok, you have users all over the world. It's not just in China, right? You have people in the United States, in the United Kingdom, Africa, Latin America, whatever, right? There are people everywhere using TikTok. So basically the way it works when someone is providing content, right? TikTok and ByteDance, they're stationed in China. So that's where TikTok is like streaming from, if you can think of it that way. The farther someone is from the provider of the content, the longer it's going to take for them to receive that content. So anyway, when companies like this, like a TikTok, need to be able to get content to everyone everywhere as quickly as possible so that they can at best serve their customers, a company like Fastly is able to help with that by providing actual infrastructure at several locations that is able to be that connecting link between the content that a developer is trying to provide and the user that's trying to receive that content. What that looks like from Fastly is actual physical servers at different locations across the globe that act as receivers of the information that these developers are trying to put out to all their fans, users, etc. Companies like Fastly just keep developers working faster, keep content creation and digital experiences moving faster, and that's the reason why we're continually able to get things at such fast rates, even when companies are all the way in China, like the owners of TikTok. This is actually pretty cool if you go into it and try to understand it a little more, because that just seems like a super useful service to provide and something that I could definitely be growing into the future. And you know, it made sense to me, the hype behind Fastly when I really looked into it. Oh, okay. You know, that's why companies like Pinterest, New York Times, Shopify, TikTok, you know, are using this, because they need to be able to get content to people quicker and quicker every day. Now, Fastly has a revenue share business model, so they're similar to Unity software that I just went over in my last video, in that the more their product is used by their customers, the more money they make, which helps us make sense of why we saw such a big decline in the stock price yesterday/today. Fastly came out with preliminary third quarter revenue results, as we can see here, and they had to adjust their previous guidance of $73.5 to $75.5 million of revenue to $70 to $71 million of revenue. They also came out and said that all previously issued third quarter and full year guidance that Fastly disclosed in its second quarter shareholder letter should not be relied upon going forward. The company mentioned that the preliminary results and the withdrawal of the previously issued third quarter and full year guidance reflect the following customer specific factors. So these are the things that affected their guidance. Due to the impacts of the uncertain geopolitical environment, usage of Fastly's platform by its previously disclosed largest customer did not meet expectations, resulting in a corresponding significant reduction in revenue from this customer. During the latter part of the third quarter, a few customers had lower usage than Fastly had estimated. So what that means is that for this third quarter, ByteDance, aka TikTok, their largest customer, didn't use Fastly as much as they did previously, or as much as was anticipated for this quarter at least. Which makes a lot of sense, you know, because TikTok was going through that whole ordeal with being able to operate here in the United States, and the Walmart Oracle deal, and the whole Trump thing. So, you know, it makes sense that there was a slowdown maybe in their usage and how much they wanted to cough up to Fastly. But alongside that, like we saw there, Fastly said that a few other customers also used their platform less than expected. So those are the things that, from what we can see, are what sent the stock tumbling more than 25%. So definitely an interesting company altogether, very interesting product that they offer. I think one that'll be very useful in the future going forward. And you know, with the recent acquisition of Signal Science and everything like that, I think they've got a lot going for them. But enough about the company. You know, it's important to know what they do and everything, and that's why I went ahead and did my due diligence, and we went into that a little bit. But like I said, more important in this situation is the strategy, the argument behind what I think could be a nice, decent short-term gain, what my thinking was here before I actually bought into the stock, and what I'm going to be doing going forward, how I'm going to be playing this as the days go on and as we get closer and closer to their earnings report, which is only 2 weeks away. Now, yesterday was just like any other day for me. I was looking through the Robinhood app during after hours between 2 and 3 p.m. just to see if there was anything exciting going on, any big moves that I could possibly take advantage of. And lo and behold, that's when I saw that Fastly was making that big drop downwards. At the time when I was looking at it, it was down between 30 and 31%. So I was definitely amazed at the big move. And right away I thought, okay, let's take a look into this, because this might be exactly the type of thing that we've been looking for. After looking into it for a bit, immediately the first thing I had to ask myself was, okay, was it justified for Fastly to lose more than a quarter of its value overnight over an update to revenue forecasts? Granted, it should be said, and I'll be the first to tell you, even before the drop and even now after the drop, Fastly is a super overvalued stock. As we can see here on Yahoo Finance, current forward PE, even after having dropped down to the high 80s, is 2,990. So obviously trading very expensively. Price to sales trailing 12 month of 40.63. So I mean, this stock has definitely had its run. I mean, it's safe to say. The second thing I had to ask myself was this: okay, if I am going to make a short-term bet, can I make back what Fastly has lost yesterday/today? Thirdly, I had to ask myself, how long would it take to get there? Or if it doesn't happen, what do I plan to do? And the way I'm looking at it, guys, is like this. Yes, Fastly may be an overvalued stock even now after this big drop of more than 25%. But I don't think that the market is done being a volatile market. I think that we're still currently in a space where stocks can make moves as big as the one that Fastly made, both up and down. As long as the presidential race is still going on and COVID is still going on and there's still a lot of uncertainties throughout the market and throughout the economy, I think we're going to continue to have big volatility in the market. So now more than ever, I think I would be more likely to make back that 30% drop that Fastly had. But for the very same reason that the stock is going to continue to be very volatile, I could also just as well see the stock go down another 30% or something crazy like that from here. I could be just completely wrong. My optimism is this: since July-ish, Fastly has seen resistance levels at like the mid-70s. So really, if it were to go down more from here, and if it were to drop down into the 70s, that's not too bad of a situation for me, because I'll just buy a little bit more. I do plan on putting around 2K worth into Fastly, so I could just put a little bit more and average down my position if it were to do something like that. But honestly, I don't see it really dropping that much further. As we've seen, it's held on at those levels and hasn't really let it drop back down to the 60s or anything like that since July. So I'm optimistic. I think that the stock will hold on for what the news was. I don't think people really paid attention to the other news associated with that press release. I mean, the fact that they had this new acquisition finalized, and the fact that that company is a Forbes soon-to-be billion-dollar company that it has great operating margins, and that they're about to add onto their portfolio this coming quarter. I don't think people took into account the fact that TikTok was going through these things with their US deal, and with government trying to restrict them. So I think people focus too much on the revenue thing and not so much on the bigger picture with Fastly. So can I make back the drop that Fastly had? Can I make back that 30%? I'm optimistic that we can. Like I said, they're going to report their earnings in 2 weeks, and they're going to talk about this recent acquisition of theirs and how it's going to benefit their portfolio. And I think there'll be more good things to take out of their report than bad. But I could be absolutely wrong, and that's the whole point of making this bet. So it's 100% a bet, guys. Something that's new to me. I'm trying it out. This is more so an experiment more than anything, just to see if this is something I could do in the future. If I am wrong about Fastly and the possible jump that we could see come their earnings, then you know what? I'll just try to break even and jump out of it. I won't really try to even play myself and think, oh, then I'll just hold Fastly for the long term. I have not made that kind of commitment, nor have I looked into the company that much to make that kind of decision. So I am just committed to this short-term play. Really, I don't plan on holding Fastly stock more than, I'd say, a quarter, and that's probably stretching it. 3 months is probably stretching how long I would hold Fastly, because I really am trying to make this a quick play. And hopefully, if I'm able to actually put in about $2,000 worth into Fastly and I make back that 30%, I can make like $600 off of that, and hopefully it would have been in less than 1 month. So, I'd be pretty happy with that kind of return. If it works out, great. Let's move on to the next one. If it doesn't, all right, let's just not lose any money, hopefully, and get out of this situation. So that's kind of how I'm going about it, guys. That's how I'm going to play it, just to see if we can make it a little more interesting going forward in the portfolio and, add some short-term playing around. But that's about it, guys. That's pretty much where I stand with Fastly, and that's how I feel about this investment. As of right now, I hold 17 shares of Fastly, and my cost basis is at around $89.55. So, I'm trying to build up to about a 2K market value position in Fastly, and once I get there, I'm hanging tight and hoping to, make hopefully about 30% back on my money. And that just about wraps it up for today's video, guys. Wanted to keep it short and simple, like I said. If any of you out there were also looking at Fastly stock and considering investing into this dip, let me know down in the comment section, because I would love to see what your guys' thoughts are around the company and potentially what could be coming up with their earnings report. As always, I'm super appreciative of all the support that you guys show. Every single person that views the video, I'm super thankful for and I appreciate. If you took any value out of today's video, I would super appreciate if you could do me the favors of hitting the like and subscribe buttons so you can show your support. And of course, if you have any video suggestions or stocks you might want me to go into, go ahead and leave a comment down below and I will definitely look into all of those. And that wraps it up, guys. More life to each and every single one of you. As always, we'll see you next week. This is Life with Dan.